providing unique reporting on markets and companies since 1990. This is the Corlin Economics Report.
Oh, welcome back. Continuing on with the weekend edition of the KE Report. As I promised in the last segment, we are switching our focus a little bit more to the precious metals, and I am chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Jordan joins me on every Wednesday to record an update on the technicals that he is watching, but I wanted to save this interview for the weekend show because there are some key developments and key relationships that we need to be watching as precious metals investors to confirm a potential breakout that could be coming. Jordan, break down some of the relationships that you are watching, whether it's gold to other markets or some of the gold stocks to other markets or other sectors in the resources that you think are crucial for a breakout to be confirmed.
Okay, well, Corey, what we really want to look for is relative strength in the precious metals complex. And I would offer you three things, as the complex gets close to important resistance, mainly gold, especially, but secondarily, we can look at GDX and GDXJ, which, GDX has, my near-term target is 25 for GDX and then 37.50 for GDXJ. I think if gold's going to break out, the miners would probably break above those levels. But so those are the resistance levels, along with in gold. It could be 1370, it could be 1360. It's stopped at those various levels over the last 2.5 years or so. But there's three things I'm going to be looking for. The two key intermarket relationships. Number one, how are precious metals performing versus stock market? So look at how gold's performing against the S&P 500. You can also look at, how is GDX performing against the S&P 500? How's GDXJ performing against the S&P 500? And I'll quickly say those things against the stock market, they have come back a little bit. And so that's something I really am going to be watching closely over the days and weeks ahead. Are we going to see the stock market come off and then gold get even stronger and benefit if the stock market weakens? That would be a really good sign. The second thing that I want to watch for is how are the gold stocks performing relative to gold? That's also a leading indicator. And I really like how those charts are setting up. I don't have them in front of me, but if you look at GDX against gold and GDXJ against gold, all the chartists out there, look at those charts, put on a 200-day moving average. And in the last month or so, we've seen those ratios, they've hit the resistance, they've pulled back, they've gone above the resistance, they've retested successfully, and who knows, they could be off and running if we get an extension of the strength that we've seen in recent days and weeks. So that's the second thing to watch. The third thing, of course, Corey, is breadth. I know this is leading into another answer, and I may go into one of your other questions, but I will say this is important, Corey. Yesterday, which was Tuesday, so at the Tuesday close, 81% of GDXJ and 71% of the HUI closed above the 200-day moving average. Basically, other than the middle of 2016 when we were hitting 100%, that was as far as that indicator, that was the strongest breadth that we've seen in years and years. So that's a very good sign. But I do want to see those figures before this move peaks, whenever it might. I want to see those figures get up to 90%. That would really be bullish. That would tell us, that's an example of real bull market breadth. Overall, over the last few days and weeks, we're just adding bits and bits of more bullish evidence that we're in a bull market, but, we're not quite 100% confirmed. And, obviously what really would confirm it would be a big breakout in gold. The monthly, one thing to watch for this month is a close above 1330. That's monthly resistance. But also next month, and we've talked about this a lot over the last couple years, quarterly resistance. Gold's highest quarterly close is up very close to 1330. So, gold is trading, probably, I haven't looked at it, but probably in the 1340s right now. Can gold close March, which would be the end of the quarter, above 1330? That would be a quarterly breakout. And if that happens before it closes above, 1360 or 1370, that would be a really good sign. So I know it was a long answer, but those are really all the things I'm watching right now.
Okay. So really in general though, seeing the stock start to outperform and seeing some monthly and longer term, even quarterly closes at or above that 1330 level, actually above that 1330 level would at least hopefully get some more people in. One thing that you did touch on there is the percentage of, let's say, the HUI above the 200-day moving average. This deals with breadth, and this also correlates to sentiment as well. As we see sentiment move higher and even breadth move higher, that's an encouraging sign. However, some of the naysayers will say it's gone too far, it's time for a pullback. Whether it is or it isn't, pullbacks are natural. But in bull markets, it's something to remember that you get into oversold or high sentiment or high breadth measurements time and time again. So just starting to get into these situations, and who knows, maybe even building a bit higher as we approach the end of the week, this is much more bull market behavior than we've had in years, really dating back to just a few months in 2016.
Yeah, Corey, that's a fantastic point. You're absolutely right. And you're right that, we don't know if the market's going to keep going and break out or pull back here. I mean, we can't predict the future. But what we do know is let's just presume that gold is going to break out at some point sooner rather than later. Let's just say some point this year. Then you're going to see extremes as far as sentiment indicators and momentum indicators. So when a market shifts its primary trend, those indicators and the overbought and oversold extremes and those levels that you were using over the last year or two, those are not going to work when a market is shifting its primary trend, as we could be seeing here with precious metals. And so that's something to keep in mind. I would not be worried about, sentiment getting too bullish or certain things getting too overbought, because of all those points that we just made. So look, we just have to step back and observe the market very carefully and try and do the best we can to assess if a breakout looks imminent or if we get, a pullback for a couple weeks or a month or two, and if the pullback is looking, bullish and we get a bullish consolidation, that would give us a little bit more evidence that we should be anticipating a breakout. But, overall, Corey, I'm not concerned about, I looked at the COT data, and because of the government shutdown, I mean, it's still delayed by a couple weeks. But I looked at it, and I think the last reading that I had, and I made a point of this in my weekend update, it really wasn't, I think gold was, with the last reading, I think it was at my net spec position for gold was around 26%, 25%. I think gold was, I want to say 13.10 or maybe 13.15. So that's really not extreme. And if you look at historically over the last 15 years, the peaks in that reading were 55% to 60%. And also, if you look at the major breakouts that gold has had, there's really three of them: 2005, 2007, and 2009. The net spec position at all those points was around 50%. So as we were saying before, the sentiment based on the COT, it was already really bullish right before gold made these major breakouts. So, and it looks like we're not that, if I had to guess right now, we're probably in the 40s. Now, I could be wrong. That's just a guess. We're not going to know for another week or two. But I'm not that concerned about sentiment, causing a big correction here. It's probably, if we get some kind of correction, it's more technical resistance. I already mentioned, the resistance levels in my last answer, and I'll throw in silver. If silver can break above 16, it has some resistance in the low 17s. So the market has moved decently over the last couple months, and it's running into strong resistance levels. That, more so than sentiment, tells me that we're probably going to see a pullback sooner rather than later. And how deep the pullback goes, how long it lasts, that's going to give us a better idea of, is gold going to have a chance to break out in the next couple months, or is the next chance going to be later in the year?
Yeah, one encouraging thing I think too about the way that breadth and sentiment have risen to these levels is it's been gradual. It's taken about 5 months really for these levels to get where they are, and it's been a nice kind of stair-stepping pattern. So I also think that's encouraging, but as you said, it does foretell eventually some sort of a natural pullback, but at least it's coming off of some more bullish factors. You even mentioned silver there, and I know reading through some of your recent updates, it seems like you're paying a little bit more attention to some of the silver stocks. Can you share with us maybe some of what you look for in silver stocks if you think that silver is ready to get moving?
Well, recently I did buy one silver company, and I'm going to try and tease it here without mentioning it, but there's so few primary silver companies out there. These companies had to move into gold for the most part. But basically, I'm looking at a company. There's a huge short position on it, and I really like the technical setup. It did break out in recent days, and it's very leveraged to silver. So I looked at the business and I did some calculations. If we get the big breakout in gold, where could silver go? And based on that, what's the upside potential in the stock? So that's, I'm really looking for leverage. Who's going to benefit? Which silver companies are going to benefit the most from a breakout in silver? And, I'd also like to look at technicals. I don't want to, there are some silver companies out there that have already had great runs off their lows. And I don't want to chase those immediately just because if they've already run 70 or 80%, they could go sideways for several months. So those are kind of the things that I'm looking for. There are, on the private side, there are some junior silver companies I'm aware of that'll, assuming we get a breakout, you probably will see a handful of private deals go public that are focused on silver. So, I'm a little bit more focused on those just because there's a real dearth of options out there. So, basically it's just, it's leverage. That's what I'm looking for. Which companies are going to benefit the most from an explosive move in silver? So, that's what it is. And there's not a whole lot of options out there. And then the second thing I'd be looking for is value. And, there could be a lot of value in really the low, I don't want to say the worst optionality plays, but the lowest grade, the companies that have the lowest grade silver deposits. Keep an eye on those because look, if we're going to have a big breakout and start a bull market, there are things that are at 10, 15 cents that could go to 50 cents or even $1. Look, there's things that have already moved, and if we get a correction, those things will correct, consolidate. You might have a chance to buy those cheaper, but also look at the things that haven't moved. I'm not saying you should buy everything that hasn't moved, but you might be able to find one or two hidden gems that haven't moved yet. So, that's what I would be looking for.
All right. Hey, Jordan, good chatting with you. Thanks for sharing some of your technical updates for this weekend show. As I mentioned, I feature Jordan every Wednesday on our website, kereport.com, and we always update the technicals, what he's watching, and some of these background indicators. Jordan, have a great rest of your weekend. If you want more information on Jordan's service, go to thedailygold.com. Thanks, Jordan.